Money. Joining me right now, Skybridge Capital Co-Chief Investment Officer Troy Gajewski, Bulltick Capital Markets Chief Strategist Catherine Rooney-Vera, and Michael Lee Strategy Founder Michael Lee. Great to see everybody this morning. Thanks very much for being here. Yeah, congratulations on the move, Troy. I want to ask you, Mike, about what you're hearing out of Morgan Stanley, because Morgan has been raising its hand for a couple of months now about this market. They're telling investors to stay away from U.S. stocks and bonds next year, citing better returns in Europe and Japan. I know you're still bullish on this market, but what do you make of the warnings coming out of Morgan this morning and for the last several weeks?
Yeah, so for Morgan Stanley's call for the equity markets to be down 20% next year with approximately 10% earnings growth next year, that means the price to earnings multiple on the S&P 500 has to collapse by roughly a third. So for us to see that sort of multiple compression, they're calling for a 2.1% 10-year. I think we'd need to see a 10-year up and above 3%, a total economic, not necessarily collapse, but look like recessionary numbers, which we're simply not seeing. And it also completely ignores the fact that there's $4.5 trillion in money markets on the sideline. So I think Wall Street sell-side analysts have largely been way too bearish since we've come out of the pandemic, and most of them, not all of them, but most of them have largely missed the mark on how well stocks have done. I think this continues into next year. I think it's if we're up 30% from January 1st to December 31st in 2021, I think it'd be hard to duplicate that next year. But the fact of the matter remains that stocks are one of your best inflation hedges, and earnings estimates are for them to be up 10% next year on top of a year where they were up roughly 30%. That's good looking for stocks. And if we are going to end the business cycle next year or the year after, where is this debt-fueled bubble that's going to explode? That's going to set us back into another recession? Could stocks sell off 5 or 10% at a certain points next year? I totally think that's possible. But again, the gorilla in the room is that $4.5 trillion in cash to the sideline. So I'd say it's going to be hard to see anything above and beyond a 5% correction unless we have some sort of economic disaster that no one knows about yet.
Well, we've got this inflation disaster, Catherine, and look at the soaring price of gas.